Yamija.
Mhm.
Okokoni, you don't have the something, don't have the rights.
You recording onto your computer?
We are live now. Don't have the rights. All right.
Hello and welcome to Mini Wealth TV. Today we have an awesome topic that we're going to be dealing with, and that is life insurance. Hard questions, soft answers. I am your host for today, Abiola Fashina from myfaithtvnetwork.com, and I have the pleasure in interviewing the founder of Imini Wealth Group, and who is a wealth consultant and a licensed agent for insurance for life and health. And she is none other than Mrs. Lola Owokoniro.
Thank you so much, Ms. Abiola Fashino. We appreciate you for being our guest host on today's YouTube Live. Thank you so much. And Ms. Abiola Fashino is the CEO and founder of My Faith TV Network. So please do well to also check her out on all social media platforms. She will be our guest host on today's topic. We're going to be answering and addressing questions on life insurance. So please do well to leave your questions on the comments, or you can also leave it on send us a note on that. So I'll hand it over to you, Mrs. Abiola. Ms. Abiola, thank you.
Okay. Are you ready?
Yes, we are.
Because this topic has always been an issue for a lot of us. Life insurance. It's like the moment you talk about life insurance, am I dying tomorrow? Are you telling me?
It's a beautiful day.
Yeah.
Are you telling me I'm going to die tomorrow? But right now, nobody has. One thing we do know, dying, we shall surely die. We just don't know when, and we don't know how. But it's better we plan for it, because it doesn't say right now, young people are dying, old people are dying. And it's like the next thing you see every time you open the news, it's somebody has just passed. And you say, what? Gone too soon? Gone so soon? So let's make plans for wealth, because Mrs. Lola Owokoniro is a wealth consultant, so you can be rich while you're alive, and you can also be rich when you die and pass on those riches to your children. But without much of ado, before we go into the questions, let me tell you a little bit about Mrs. Lola Owokoniro. And while I do that, if you're watching us, please share onto all your social media platforms if you're watching live. And if you're watching the replay right now, tell other people about this broadcast because it could change somebody's life or the life of the children of somebody who takes action today. It is not the information that you know, the knowledge that you know that would help your life. It's the knowledge that not only you know and also apply and take action. So Ms. Lola is going to tell us how to take action on this life insurance issue. So let me read a little bit about her bio while you go ahead and share and call other people to come online, because we're about to drop some nuggets that could make your life a better life. Everybody wants to be wealthy, and Mrs. Lola is an expert, a wealth consultant in that area to tell us how to be wealthy. So Mrs. Lola Owokuniro is the founder of Imini Wealth Group, LLC, and an advocate for financial literacy. She is an accountant, a licensed financial professional. She's certified as a financial educator. She's registered as a social security analyst, and she's a certified college consultant. So if you're looking for all those scholarships for your children to go to school and end up without a big fat debt and loan, get Mrs. Lola Owokuniro to show you how to get all those scholarships. Now, Mrs. Lola has been practicing accounting and finance for over a decade, with a vast experience in accounting and reporting for small to large size business corporation. She is very passionate about providing detailed training to her clients on topics such as budgeting, debt management, building wealth, protection of assets, and understanding of how retirement and social security planning works. Lola has been able to help hundreds of families through public complimentary financial workshop seminars and on one-on-one consultation, and she has conducted in person and also virtually a lot of meetings to educate people. She is a wife, a mother of 2 lovely children, and a Metro Atlanta, Georgia resident. One of her best quotes is that she says, "It is a travesty and a true injustice if the everyday person does not have unlimited access to critical financial concepts." Today, you're going to be listening to Mrs. Lola Owokuniro on the issue of life insurance. And she's going to break it down to us in simple terms, what it's about, and all those wonderful questions that you want to ask, I'm going to ask her for you. And please listen, come back. And if she speaks too fast or the terms are a bit too much for you to understand, come back and watch it again and again on Imini Wealth TV. We're going to be, the next 3 episodes are going to be really life-changing, because today is life insurance. Next episode is going to be on estate planning. And the next episode is going to be on credit, how you can create wealth and get your 850 credit score and be able to live life enjoyably with good credit. So stay tuned. Come back from time to time to Imini Wealth TV. Every month there's something new. Every week there's something new here on Imini Wealth TV. So if you're ready, sit back and let me ask those questions for you. Mrs. Lola, are you ready for us?
Yes, I am.
The first thing I'll ask you, who needs life insurance?
Everyone. Everyone needs life insurance.
Why do you need life insurance? After all, we're alive, we're well. So why do I need life insurance?
Life insurance has many purposes and ways you can use it. The traditional understanding is that we need life insurance in the event that we pass away. There's been a great transition from that to today. So just like, cell phones, when cell phones first came out, we had the big Motorola, Samsung, the BlackBerry phones, and it's evolved over the years. The same thing with life insurance. It has evolved. We have new products that are properly structured, if properly structured, can suit so many needs, even while you are alive, which I hope to cover today on today's session. Yep.
Okay, so look now, okay, we always see adverts, life insurance on TV. How many types of life insurance do we have?
They're primarily just 2 types.
Okay.
The most common one is the term policy, and the second is also called the permanent type. Now, under the permanent type, there are three major types. We have the whole life, we have the GUL called the Guaranteed Universal Life, and lastly, we have Index Universal Life. And I also, with Immuniworld Group, we also like to add one more, which is the final expense, which just covers the burial expenses, funeral expenses. So typically for anyone who cannot afford a term or permanent type, either of those, it's always highly recommended that you at least have what we call the final expense, which covers the burial and funeral costs for the family. Yeah, for the deceased. I'm sorry about that. For the deceased individual. Yes.
So now the deceased individual is actually you. When you say, basically, okay, I want to have the barest minimum so that at least if I go now, if I drop dead now, my kids will at least have the money to cover my funeral, put my body away.
Correct. So that's usually much better and more preferable than GoFundMe.
Right.
Which we always lean towards in the event that someone suddenly passes away without proper planning. Yes.
Because I do know that right now we're in Georgia, Atlanta, Georgia, and it might be the same in other states in America. I know the average funeral cost is about $12,000 to $14,000. That's the barest minimum. And so and then if you want to do cremation, you're talking of $3,000 to $4,000. So if somebody just drops now, what you're doing is you have put your children in a debt of, they have to choose if they're going to burn your body, it's going to be $4,000 to $5,000. If they're going to do a proper funeral, it's going to be $12,000 to $15,000. But where would they find that when they just didn't know that you're going to die? So it's better to have a life insurance in place to take care of that without GoFundMe. To me, I mean, correct me if you're wrong, if I'm wrong, Mrs. Lola. To me, when you do GoFundMe, it shows that you lived an irresponsible life. You did not make any plans for your children or for your future. So if something happens, you're not asking everybody, please help us, help us.
In other words, yes. And like I said earlier, life insurance has evolved so much. And then back to the point on this, when a loved one passes away, it leaves a lot of financial stress on the family. Most individuals, with the GoFundMe, it's not even enough. And we find that, especially if a critical person, someone who's the breadwinner of the family, passes away, that's an income loss right there.
Right.
So it takes about 5 to 10 years from that family to recover from the loss of that individual's income. Because, first of all, they're dealing with the grief of losing a loved one. Then they have to think about, okay, how are we going to get money for this individual? And then when the bills start coming in for a family that's been relying on the cost, the home expenses of, let's say, $3,000 a month, considering inflation today, if your family basic expenses has been about $3,000, $4,000 a month, that's a loss that would affect the family's day-to-day living, especially if you have younger ones that are involved in other activities. How are they going to keep up with that same lifestyle that, say, a father has been providing for that family, or a mother, or maybe, it goes either way, either as a single parent or, as a family, a couple, a family unit. So it's very important that we put all these things into consideration and do the proper planning. And this is one of the things that we do, one of the services we offer at Immuniworld Group. We sit with each individual, each family, and we listen. We try to listen to your needs. The goal is to educate. The goal with Immuniworld Group is to also provide you what's best suits the goal of that individual or that family. Yeah.
Because that brings me to my next question, which is, how do you determine how much life insurance you need?
Yes. So like I said earlier, when you're getting life insurance, everyone's goals, everyone's needs are different. And then again, everyone's budget is different because you do have to budget these things. At the same time, you want to make sure that you're able to provide, the basic needs that you need as an individual or as a family. At the same time, you want to set aside, you want to be able to afford these premiums in the event that, a sudden loss happens.
Right.
So that it can fit the goal of that policy has to be able to come into action for that person.
Right.
So everyone's goals are different. Life insurance policies, when we sit with you and we consider your goal, then we can be able to tell you how much you would need. Now, when we talk about how much should we buy, there are different strategies we can use. One of the strategies which I strongly encourage is considering, especially if you're the breadwinner, how long, about 5 to 10 years, it would take that family to recover from that loss. So say your income, your take home is about $40,000 a year. Now, $40,000, we're going to multiply that by 5. Again, 5 years to recover from that loss. That takes you to around $200,000. So ideally, you want to make sure that your coverage, if the goal of that individual is to say, okay, I want this money to be able to come into play for my family to not suffer from that financial loss in the event that that individual passes away, that $200,000 coverage will be paid out to the beneficiaries on that policy. And then they can take money from there to, pay for the funeral and also be able to sustain the family before they get back on their feet. Yeah. So that's one strategy we do use. Again, going back to budgeting, you have to know what you can afford. Yeah.
You have to know what you can afford so you can know how much you pay monthly. You can just start an insurance and pay halfway, and then after 5 years, say, I can't pay anymore and drop off.
Correct. So not to digress from the question, when we talk about different types of life insurance, with a term policy, the term policy is considered a lease, an apartment. Pretty much you pay as you go. Most people are drawn to that type of policy because it's cheaper. You get more money, you get more policy value for a little amount. Say, $100,000, you can get that for $50, $100. There are different variables that come into play. Things like your age, your health condition, your background check. Every insurance provider, what they look at is typically very different. Now, when we do that, you also, with a term policy, it's a pay-as-you-go structure. So and it's structured for a time, a set time. So typically 15 years, 20 years coverage. So if you have a coverage of $100,000 and you're paying, say, $50 a month, after that year 20, your coverage stops. Now, at the age of 20, so say you start this at the age of 30, and you have a 20-year coverage. When you're 50 or 51, ideally, because yes, they'll cover you for year 50. So when you're 51, that policy will not be active no longer. You have to reinstate it. Now, they won't give you that same policy of $100,000 for that $50. No, because again, you're much older. You might have medical conditions at that time. So the premium, your monthly payment is definitely going to go up. So that's why it's very, very it's very good to start this early on, especially before any medical situations come into play, making sure that you have a good slate to get a good value of policy for little money. And then when we look at the whole, the permanent life insurance, you're typically covered for the rest of your life, up to 100, up to 120. With permanent life insurance, there's so many things you can.
Permanent life, what you call the whole life?
Yes, permanent life will be the whole life, will be the GUL, called the Guarantee Universal Life. The Index Universal Life also will be another example here. Will be another type under the permanent type. So those three are usually you covered. You get the coverage for the rest of your life. You are usually covered for the rest of your life. And then they also have other living benefits that you can add on if you sit with a good licensed professional. They can structure it to suit other goals
So
for you.
let's say you need some money for your kids to in college, you can take out
Oh,
of your.
Yes, for the permanent life. Yes.
If that was structured in before.
Yes. So for the permanent life insurance, we have what we call the cash value. The cash value it's an added benefit to the life insurance policy. It's, in simple words, having a cash account in your life insurance. That's what it is. Having a savings cash account added on to your life insurance protection. Yes. With the whole life, they typically give you a lower interest rate. The cash value build up there it's not much. But with the GUL or the Index Universal Life, those funds are usually used in the index market. Yes. So the money is not just sitting there. The money is put in the market, and depending on which company you go with, some companies will give you a set interest rate. The good thing about those, the GUL or the IUL is, regardless of the performance of the market, if the market were to drop, you don't lose the value of your cash in that. When you pay your premium, I want to point this out. When you pay your premium every month, a set amount is covering the cost of insurance, which is the life insurance. And then another set amount from the premium is put into the index market, or in the case of the whole life, you generate revenue, interest on that amount to grow your money in that policy. You're yielding interest. You're yielding interest on your money. So it's always highly advisable, recommended, sit with a professional. Again, individuals' goals, our goal is to match with the type of policy that you need. With Immuniworld Group, we are always very particular about that, listening and making sure we match you up with the right products that you need. Yes.
I have two questions in a row.
Yes, ma'am.
Okay, number one. Can I buy insurance for anybody? Like put insurance on my husband for 2 million or for 5 million? And then, can I buy insurance? How many policies can I have? Can I have 2 or 3 policies? Or can I buy insurance for my mom who's in Africa and she's 86 and I know I can put 5 million on her?
So we have to, the questions you ask is those are good points. Those are good questions.
Yes.
Very good questions. So you can buy insurance as an individual for your direct loved ones. What do I mean by that? Grandparents can buy for grandkids. Parents can buy for kids. Husband can buy for spouse. Children can buy for their parents. There has to be a direct relationship with the owner of the policy. You can buy for your kids, like I said. The children are at a great advantage, and this is why. You can buy them when you buy a policy for a child. You can get them a policy as soon as they're 15 days old. That's the earliest. 15 days old, they have their Social Security, they're good to go. The advantage the kids have is when you set them right early on, before any medical situations come up, they have that locked in. Number two, when you're putting money, especially if you buy a permanent type, you're growing money in that policy for that child. When we talk about wealth, there are a few factors you have to consider when you're growing wealth. One of the factors is time, which is the advantage that these kids have. Time, they have time for that money to grow. And by the time they're ready to go to college, There's money set aside to cover their college needs or put as a down payment towards your first home, start a business, anything. You don't have to tell the insurance companies why you need your cash invested in that policy. So they have the advantage of time, which is why we really recommend it when we're talking about generational wealth, which I hope we'll cover in the next, as the questions come in. This is one way to build it, taking advantage of time for the kids. Now, your second question was, please remind me again. Yes, you had two questions.
Can I buy it for my husband who's here, and can
Yes.
I buy it for my grandma who's in Africa?
So no, you for grandma in Africa, if she has a social security number, yes, you can. It's highly recommended that when she visits, you talk to a professional to put that in place for you, because they might require her to do some medical testing, blood work, and things like that. It depends on the need for why you need that coverage. So every company, every provider is different in their requirements, but preferably, especially when she visits, when she's here in the States, especially, and then she has a social security to her name. Yes, you as a child can buy a policy for your parents. And talking about parents, especially for our generation, where we have parents and we have kids, we're in the middle. So we are like a double-edged sword. Our parents are relying on us in the event that they need medical needs at their age, when they're much older, where they have medical conditions. And in the event they die, that funeral expense is going to come out of our pocket as the child, or then we do the GoFundMe, or I've seen cases where they've sold the deceased assets, to cover the funeral costs because they didn't gather enough money. And then on the other edge of the sword, we have kids that are looking up to us. So our generation, especially, if you find yourself in that situation, you need to make sure that you as an individual, because you're pretty much a breadwinner. You have your parents looking to you, and you have your child who are looking to you as well. You want to make sure that you have some form of coverage. And if anyone is listening to me out there, I'm hoping people are watching as we're talking about this. Do what you can afford. If you decide to go with a term policy, which is typically a cheaper route to go, make sure you get a convertible type, which is an added feature on the term policies. A convertible type is saying that, yes, I'm going to get this coverage for, say, 10 years, 15 years, 20 years. But in the event, before that policy ends, that coverage ends, your income is going to change. Maybe you have, as you grow, as you age, your income will increase. Then you have more room to make changes on your finances. So that's where you want to go, but you want to speak to a financial professional so they convert that term policy for you, which is a temporary type of policy. It's pretty much an apartment. But when you make it a convertible type, you are able to convert that term policy into a permanent type. You can do a whole life, which gives you coverage for the rest of your life, or the same thing with an IUL or a GUL type. So the main thing is making sure you get something in place, and then for those that do have medical conditions, try to get at least a final expense policy, making sure that you have at least expenses to cover your, in the event that you pass away. So you have the right things in place to meet those needs. Yes.
Okay, so basically, there's no excuse for you not to have a policy in place.
Yes.
So the least you can have is at least have the funeral one.
Yes.
So at least that. The next one would be the term life one, which
and make it convertible.
Then make it convertible. So we
Yes.
can say, okay, I want to do 10 years, so at least I have something to cover me, and maybe I'm just paying $50, $100 or dollars per month. But then when I get a better job and I want more, I can
Yes.
convert the term to another kind of
Yes.
policy
Yes.
before it expires.
Yes. And I want to add also, When you're buying a policy, like the example I said earlier, where the goal of that family was to have income in place in the loss of a breadwinner, 40,000 a year take home, giving them 5 years of income, making it $200,000. If you cannot afford that 200,000, start with at least 100,000. Do what you can afford. And within the next 2 years, you are always eligible, allowed to increase the coverage, the amount of coverage that you have. And to answer your second question, I remember now, yes, you can have multiple policies. You can have a term, you can have a whole life, you can have a GUL. No one is counting. You want to look at life insurance like a house. People, a lot of us are into, well, for those of us that are into real estate, we own properties. We do the Airbnbs, we do the, if you're into the commercial type of real estate, you own different properties. No one is counting, but mind you, the IRS is watching. So those assets are considered taxable on the gains. With a life insurance policy, you want to consider that as also a house. But the positive side of this is you are not taxed on the money here. The proceeds are tax-free. Your cash savings, your revenue you generate on the cash value is tax-free. Your cash withdrawals is tax-free. And you can even borrow from yourself. So that's the difference. When we also look at a life insurance policy like a house, it's also considered, you also have equity growing in there. What do I mean by that? So with the individual that starts with, say, $100,000 and you do a convertible term life policy, you can roll the value because remember, you're putting money in there. The only difference is that you don't have that cash value attached on the convertible type. It's a term policy with the advantage of rolling the equity you build in there into a permanent type. The same with an IUL, the same with a GUL. If you decide to start with a permanent type of policy today, do what you can afford. If it's $100,000, if it's $250,000 you can afford. As your lifestyle, your income increases, where you can afford more in value of your policy, you can always, typically the average time span is 2 years after the policy has been into play, effect. You can always roll the equity on that 100,000 into a higher valued policy. Oh, right. Yes, you can always roll that over. So just like a house, you buy a house today at $200,000. The value of the house is growing. You're acquiring equity on the house. You roll it over into a bigger house of $500,000, the same thing. So again, to your point, no one has any reason not to have something. The goal is to encourage everyone, especially in our communities today, is to get something into play. You look at the
experience. Mm-hmm. Why would you say a lot of people do not have life insurance now, and we end up with GoFundMe?
So I believe one of the biggest problems we have that I have seen and what we experience here at Immunoworld Group is people procrastinate. I'll do it later. And we've heard stories of a lot of friends and family going to bed and not waking up the following day. Then we have the GoFundMe, or an accident happens, or with the shootouts that happens in the society today, all over the US, we hear these things on the news. And things happen suddenly. And many of us think we have time, but again, death does not announce itself. It is part of life. It's a necessity of life that's going to happen, so we just don't know when it's going to happen. But again, you want to make sure that you do the proper planning so that in the event that happens, your family, your loved ones are at peace. They're not financially stressed. They're not leaning on other family members. They're not leaning on the community to cover your funeral expenses. And I want to add this also, a lot of insurance providers today also have what we call concierge planning, whereby when you get a policy with them, they even help you plan your funeral, from what caskets you want to pick out, they in details, you can document all of that. So your family members are not trying to figure out what you need or what you would have loved to happen at your funeral. So that is also a free charge, which a lot of insurance companies are also offering their clients, their customers today. So with Immuniworld Group, we try the best to give you the total package, making sure no stone is left untouched. We try to make sure that we explain everything so you understand when you're signing the policy, this is a contract. Yeah. So the wins for us is making sure that when you need money from your policy to start a project, or in the event that the individual passes away, money is set aside to cover those needs. Yes.
I have two questions again. Two. Question number one, they're both intertwined. Question number one is, if I want a policy now, how do I get one? Or how do I start? What process do I go through? The second question is intertwined. After I get a policy, if anything happens to me, what should I do, or what information should I give my children or my family about the policy, so that if anything happens, they'll be able to access it immediately and get access to the money?
Okay. So if you do need a policy, of course, reach out to Immuniworld Group. We'll be able to serve you. We'll leave our contact information in the description box. And of course, if you had seen this on all the social media platforms, please send us a chat. We'll be more than happy to serve you and your family. Now, sit with a licensed professional. I'm not talking about a bank. I'm not talking about an auto insurance person. Make sure you meet with a licensed in life and health to make sure that you get the proper protection that you need that will suit your goal. You can also call the providers directly. Nationwide, you can just to name a couple of common ones. You can also, call the providers also already. But, with Immuniworld Group, we make sure that we have that connection, that you are able to tell us your goals, and we make sure we find the best niche for you. We're able to affordable. That's the thing. That's the goal. Yeah. Something that can speak for you. Now, your second question was,
now that I have a policy.
Now that you have a policy. So now that you have a policy, there's a couple of things that you should be doing. Remember, just like I said, that the life insurance world evolves. When your policy is at year 3 or more, please make sure that you're having an annual review. Have an annual review with the agents that sold it to you, or again, you can reach out to us. We'll be able to help you review your policy. We do that. Now, having an annual review is very important for a couple of reasons. There are new policies, new features, new riders that come out every day, just like a cell phone. iPhone, Apple product, Samsung, they come out with new phones, new features every day, new apps, new updates. Yes. The same thing with a life insurance policy. You want to make sure that you always do an annual review if you have a policy that is 3 years old or more. And also, please make sure that so there are a couple of, for security reasons, there are a couple of things you also need to do. Now, I always recommend having a safety deposit box, making sure that, where you keep your crucial information, things like that are stored in there. Tell your loved ones, especially if you're married, inform your spouse. If you have kids, let them know you have a policy with so and so provider. If possible, let them know the agents that sold it to you. And there are a couple of, and the reasons why is in the event that you pass away, yes, those companies will be notified, but it's always good to carry your agent along and inform them so that they can expedite things for you in the process. So it's very, very important that you sit with a licensed professional so they can share these updates with you as the new products, new riders, new add-ons come on, and review your policy annually, and also inform your loved ones. And like I said, for security reasons, with the dynamics of family, if you're worried, you don't want to tell anyone, make sure that you have a safety deposit box. Now these days, you don't really have to have a box. There are websites that will offer you what we call Tenzin, where you can store your vital financial documents like your bank information, your life insurance policy, the documents for your house. All of that will be stored up in the cloud. And in the event you pass away, on that Tenzin application, you have to list out the contact information of who should get this information when you pass away. So it's like you're storing it in the cloud. And then when you pass away, the company gets notified. But before you passed away, you already added on a contact number, someone for them to reach out to pass that information to. So you don't really have to tell your loved ones. If you have the proper software, it's called Tenzin. A couple of insurance companies do provide that as well. So you can document, upload files, pictures. You can even write on there how you want to be buried. Critical documents can be scanned up and saved up there, your policy number, your agent's contact information, your banking, the bank accounts, everything can be saved on there. And when you pass away, they'll be notified. Yes. So that's for security reasons. That's one way I always lean towards, because, nowadays we've heard stories about insurance scams whereby, a sudden death of an individual that just got a policy a day, you hear those things in the news. That's, for security reasons, that's one way to go around it. Yes.
Okay, I have another way. Now, last question. My last question today would be, as a wealth consultant, how can we use life insurance policy to pass on wealth to our children? For example, and let me give an example of me. If I want to give, I know that when I die, the life insurance policy will give money to my kids. I say, okay, I want $500,000 I have 2 kids. I want to give them $500,000 each. So I take out a $1 million insurance policy on myself. And I put all the information about it. Now, how do I protect that, and how do I use that to pass the wealth to my children?
Okay, so that's a very great question. Life insurance in our communities today is underutilized in terms of generational wealth, and also to build wealth actively. Remember, those are 2 things: building wealth actively and generational wealth. They're 2 different processes. In the community of Black African Americans today, only about 56% of us own policies. Now, with the white Americans, over 81% owns a life insurance policy today. Yes. So it's very, very important what we're doing here today, to learn this as a wealth building tool, as a financial tool, with the knowledge you acquire today, with all the talk we're going to be talking today, application is very crucial. We have to apply it. We have to stop this negative domino effect of passing on financial debt, of passing on financial stress from one generation to the other. We have to plan for the future. we have to start a positive domino effect with one of the tools being a life insurance policy. It's tax-free. It is tax-free. You know, the white Americans pass on generational wealth easily this way. Our generation has it's the hardest, our community. And again, it's all of it's okay. Let me go back to your question. So when we're talking about generational wealth, when you pass away, the policy is paid out to the individual, to the beneficiaries. While you are alive, also, you can borrow from that policy. You can borrow money to do business. You can borrow money to invest in stocks, in real estate. You can be your own bank. The interest rates on these policies are really, really low. I've seen as low as 0.5, you know, in the industry today. And there are many companies out there that if you pay that money back, they recoup you with your interest, which you paid on that loan. And in the event that you pass away too soon and you don't pay that money back, they deduct it from the payout to the family. So we don't have any excuse, any reason as to why we cannot start a business. You can be your own bank. And for that is one way to build active wealth. You can borrow money from the policy. You can also borrow money from your cash value or even withdraw. You don't have to borrow from it. If you have $50,000 saved up in your policy that you've been paying your premium for 5 years, 10 years, the numbers are different for everybody. You know, there are different variables to consider. You can take money from that cash value there to invest into other businesses. You can, please don't take that money to go on vacation. I want to make sure we say that. The goal is to invest that money. If you're looking into going into real estate, that's one way to start saving money. Because, you know, there's this popular term that a lot of us say, oh, I'll just do the term and I'll invest into other things. Many of us never go back to do the B part of that statement.
Yeah.
We do the term, but we never use that money into any investment, you know? So when you do a permanent life insurance policy, either the GUL or the IUL, you know, or the whole, you're committed to that. You're saving towards your future self. In the event that you don't take money out of that cash savings, if the agent is to, you know, structure this properly for you, because you have different options. Every company is different. The cash savings and the value of that policy is paid out to the beneficiaries. So building wealth, generational wealth, there are many ways you can play with this. You can strategize with owning a life insurance policy today. Mind you, it is tax-free.
It's tax-free. That's one of the biggest things
tax-free.
taken away.
Yeah. And then, you know, added benefits to owning a policy is you can include things like long-term care, critical illness, chronic illness riders to that policy. Like, you know, in the event that, you know, terminal illness, in the event that, you know, you have any long-term care needs, they will pay you a portion of your face value. You don't even have to touch your cash savings if you don't want to. If you have a policy of $500,000 and you need long-term care needs, and long-term care needs could happen to anybody. You don't have to be in your 60s for that to happen. You know, long-term care needs is when you are not able to perform any two of the basic ways of living, bathing yourself, feeding yourself, going to the bathroom. If you can't perform these things, then you're considered to have or need a long-term care, whereby a family member is taking care of you at home, or you're in a nursing facility or assisted living, you know. So a certain portion, every carrier, every provider with their requirements are different. you are able to get paid out a portion of that. You know, we hear stories of people having cancer suddenly or having a stroke.
Right.
These policies will come into play to help with the family's needs, to sustain them through that medical stress, medical crisis, paying the bills, helping, especially if it's a breadwinner that suffers from that medical situation. You know, how do the family members continue to live on? So it's not only when you die that you need a policy to work for you. There are other benefits that you can add on to it. Everyone's needs, everyone's goals are different across the board. Yeah.
Let me sum up everything you have said. I said I've asked the last question, but I have the last question. Number one, there's no reason why you should not have a life insurance policy.
Yep.
The two, it's easy to set one up, and you can have either funeral benefits, term life that you can change, and then you can have the whole life, and then you can have the one that has the cash benefits in it.
Yes.
There's no tax. These are not taxed. You can borrow for yourself. You can invest in future. You can make a plan for your children and pass wealth on to your children with the life insurance policy. So we need to go out to do that, but we're not going to go out to do that. We're going to come to Emini Wealth Group. So can you tell the audience how can they book an appointment with the Emini Wealth Group, either physically or virtually, if they have other questions about life insurance?
Okay. So we can be reached at 470-939-5943, or visit our website. That's another means of reaching out to us, www.eminiwealthgroup.com. And we would also leave the description in the description box, the link to reach out to us, our contact information. Please do well to book an appointment. And we do offer free consultation on every financial needs that you might have. Retirement planning, college planning, life insurance planning as well, which is very important. It's a very good tool that can help you in so many ways. Going into investments, generational wealth, retirement planning, for a lot of us. I want to encourage the Gen Z and the millennials. Yes, the Gen Zs and the millennials to strongly consider this, taking advantage of time to start putting money aside in a policy that will grow for them, when they need it to speak for itself. It's not only when you die that you need a policy. Yep. Thank you, Ms. Abiola.
Thank you so much for having me on the Emini Wealth TV. And if you've been watching, please share this information. We are going to be hitting 3 major topics in the next quarter: life insurance, estate planning, credit, 850 credit score planning. And please come back to Emini Wealth TV every time to get more information and get soft answers to hard questions. Mrs. Lola Owokonira, thank you so much for having me. Do you have a last word for your guests before we sign off?
Yes. Thank you, Ms. Abiola Fashino, for joining us on today's segment. I hope everyone listening to us has been able to take one or two things from today's topic on life insurance. And as you've learned, I strongly encourage you all to take active steps on this topic discussed today. I've shared my information. Again, our number is 470-939-5943. And to add on to what Ms. Abiola Fashino said earlier, we will have live YouTube sessions on this channel, Emini Wealth TV, every third Thursday of every month. And we will upload new videos weekly on Mondays. So please do not forget to like, share, and hit the subscribe button to this channel. Thank you all for viewing today. I am Lola Owokonira, and this will close the segment on today's topic. Thank you all for your time today, and we look forward to hearing more from you. If you have any questions, it's not too late to also leave them on the chat box. If you have topics that you do want us to discuss in coming months, we will do well to address them. If possible, also bring on other guest speakers as we journey on. Finance is a journey. So start your journey today before tomorrow is too late. I would love to end with that today. Again, thank you all for joining and have a blessed one. Bye. Bye, everyone. Thank you so much, Ms. Abiola.
We are still live on
Yes, you're
YouTube.
still live, but I hope we addressed all the questions.
I believe we did
chat.
address all the questions, and I believe that people would come in and ask for more information about life insurance. It's very important for them because and I love the fact that we were able to talk about passing on generational wealth, because this is something we as Africans and African Americans must learn how to do. The biggest secret that you did say being that it's not taxed. So we can actually get away with saving money for ourselves, saving money for our future, and saving money for our children. I also like the fact that you mentioned that life insurance covers long-term health, because nobody knows where cancer will show up, or you get hit by a bus, or you fall at work and you can't do the simple things you need to do. So that will come in place. So it's always a benefit to have the life insurance. And if we can start with even term, like you said, and I like the fact that you said we can start with term and then change it to the other one, higher one where you're making more money. So you are covered whatever happens. So if you slip and fall and die right now, you have something.
Yes,
and
thank you so much.
Do good work and you make more money, then you can up it. I personally want to up my own to $1 million. So at least if I wasn't a full millionaire while I was alive, at least my kids will inherit the $1 million and say, this is what my mom gave me. And because of this, she has set me up for life. And I will also, like you say, you can have policies, you can ask them to come in, the kids, and show them you also can have a policy now. You're young, you don't have no medical, just, do your, what you call Uber Eats and drop the $50, drop the $100 a month. Before you have 50, 100,000 saved up that you can use for real estate, or you can use for something important. And so you never have to be hungry or ever have to go borrow money again. I love those spots.
Thank you. Thank you so much.
Touched about having funeral expenses so that you don't have to go run to GoFundMe, because that's what's happening with a lot of Africans. You don't plan for death, and death suddenly shows up because you weren't taking care of yourself. Heart attack comes, and then the kids, they haven't gone to school. They have the mortgage to pay. They have the car notes to pay. They have student loans, and they don't know where to start.
Yes. Thank you.
It was good. It was good.
All right. Thank you all.
All right, let's go off live so we can plan more exploits.
Yes.